Welcome back, everyone. This week, we're going to go over my weekly performance report, and I've already made the video for the week, posted a couple of days ago. Every investor needs to watch this, so subsequently, less than 10% of my subscribers watched it, and then they watched it for 10 minutes. So you do you, but with that out of the way, this is the first time that I'm showing you over on my Substack. Link will be in the description. My weekly performance report, I post it, shows whether I was up or down, how much, and what names I hold, and what I bought, what I'm holding, what I sold, things like that. So with that, just to cover this, in case you're interested, going over to the Substack channel and subscribing, hopefully. Let's go over what this weekly performance report is. The weekly performance report shows my weekly portfolio performance, names and all. It also shows you how I've done year to date as of the ending of the last full month. Scroll to the bottom if you want to see my performance and names. But before we do that, it's a new year, so maybe new audience members. What is Cup of Coffee Capital about? A brief overview. This is brief for me, so like it or leave it. Number one, as the name suggests, is the capital you have from a cup of coffee. The purpose being that it doesn't take much money to get started investing. Investing $7 a day is over $2,500 a year, a respectable amount of money for millions of Americans. Number two, outside of showing that it doesn't take much to get started buying stocks, I wanted to show you that you can beat the market. I don't know if I will, but either way, I provide a weekly update as well as a monthly and year-to-date update of my portfolio. This includes the names I hold and how much I've gained or lost on the positions. Everybody wants to talk tough, but not show receipts. Well, here are my receipts. Number three, I wanted to talk to people and help them with the obstacles and challenges associated with investing when you first get started, as well as other people have ideas and maybe I'd benefit from those too. So a synergistic, complementary opposite, exchanging ideas and improving on them and making money. That's the goal, isn't it? Number four, the name of the game is simple. I contribute $50 a week to my portfolio. My benchmark is the S&P 500. Why the S&P 500? Because if I wasn't actively investing, that's where I would put it. A 3-year rolling average time frame is how I measure my performance. Yes, of course, I measure it every day, week, month, quarter, and year, but to know if you're doing it right, a single year seems too short and 5 years seems too long. So 3 it is. Number 5. Outside of the weekly performance report, I post deep dive articles on various specific stocks and sectors. On top of that, I'm a huge fan of psychology. I believe investing lies at the intersection of psychology and economics. As such, the extent that you understand those two things is proportional to your success in the investing game. Therefore, I have a lot of investing adjacent and tangentially associated discussions for you. Number 6, I put my money where my mouth is. If I'm talking about something, it's because I think it's relevant. If I'm talking about something, it's either because I'm invested or looking at getting invested. I'm either talking about something because there are lessons to be learned or because it will make me wealthier. After all, isn't that what we're all here for and after? And number 7, there's too many stock publications that pontificate. There's too many publications with fictional simulated trading accounts. I believe in walking my talk. There's nothing quite like doing the real thing for yourself. Skin in the game matters. Too many people who can't make money switch it up to be internet grifters. It's a lucrative business after all. They make more money on their subscriptions than they do on their trading. I find that despicable. Put up or shut up. That's what I say. All right. I ended the week down 1.38%. As you see on this first picture, January's not ended, so I have no numbers to put in the 2024 row. On to the names. Well, bought a lot of stuff. So my cash position fell from roughly 8 or 9%, let's call it, to 3%. The names I bought is I added another share of St. Joe Company, ticker symbol JOE. I added some MSOS, and I added Universal Stainless Alloy, US ticker symbol USAP. What am I thinking of doing? Sorry that not all of this shows on the... Yeah, that's as much. So scrolling it is. So I guess either pause the video or go to the link in the description and look at it yourself. So let me just stop here. I would like to make a video. I'm going to make a publication on the offshore space, as that's roughly 27, 30%, something like that, of my portfolio. So pretty much many of them were flat to down on the year for 2023, and they're not having the best beginning to this year. I'm kind of waiting for the Q4 earnings reports and conference calls and all that to happen. So I'm going to hold off on that for a few weeks, even though I believe a few names, the Schlumbergers and things like that, have reported. Things are trickling out, but I want to wait for everything to come out before making a post. From time to time, I consolidate names I hold and sell off things. I kind of ask myself the question from time to time, if this were to fall 20%, 30, 40, 50%, would I buy more? If the answer is no, then I really need to reconsider why I own it, regardless of whether it's up or down. Some of those names, Franco-Nevada, I'm down 13.5% roughly on that. That was a 50% probability trade. And I didn't mind if I got it wrong holding the name. But honestly, I'm not too excited about it. And if I'm bullish gold, then it seems like there's better ways of playing it. So I might be selling that off, and then I'll be sitting at roughly 7% cash. And I'm okay with that. I've thought, and not really going to elaborate on it too much, but I've thought about selling my Transocean. And the reason I bought Transocean to begin with was because I kind of wanted a leverage play to the upside. Normally, I don't like doing that. I like to find the best cash flow balance sheet to weather the storm. But I got into the, Cup of Coffee Capital came about January 1st, 2023. So at that point, we were a year or two into the cycle. And the worst to be worried about in regards to Transocean kind of was figured out. They went from a going concern to not a going concern. But I don't know. Valaris seems cheaper on a replacement cost. And I suspect by the end of the cycle, Valaris's performance will do as well as Transocean. Transocean was also a levered geared bet to offshore space doing well, but it was also just as much a greater fool's theory kind of game, so to speak, of it had a lot of liquidity. That's where the funds were flowing. That's where the intention was focused, and that's where the sentiment was being expressed. And I noticed sometime last year that Transocean was doing better than Valaris. On good up weeks, Transocean would do better than Valaris, but the past couple of quarters, that's not been the case. And then Valaris had their rough patch for capital allocation, let's call it, mid last year, and then they kind of got penalized for that. And since then, seemingly most people have forgotten about that. What am I on? So I'm ever so slightly up on Valaris, 0.5%. And I just don't see a good reason necessarily because much of the offshore space is one of being geared to higher day rates, utilization rates, and a lot of people in the space are playing the discount to replacement cost game, let's call it. Not necessarily book value, but the market value, the replacement cost value. And Valaris is just as much, and I would say more so, trading at a discount to replacement cost than Transocean is. So I don't know. I don't know if I'll transfer my Transocean into Valaris and call it a day, kind of consolidate the portfolio, one less name I have to follow as closely. And I got a lot of names on here, and that irritates me. At some point, it's kind of like when you get too much clutter in your house. You want to just start throwing things away. That's kind of how I get. Louisiana Pacific, seemingly, I would have been better off to buy Blue Links, which that day I actually bought Louisiana Pacific. I tried to buy Blue Links, but I actually didn't have enough cash in my account at the time, so it was too late to buy Blue Links over Louisiana Pacific, and I'm up 20%, but Builder's First Source broke out way back when, and then Blue Links has subsequently broken out. Boise Cascade broke out some time ago, and Louisiana Pacific's diddle-dicking around, and it's kind of pissing me off, to be honest. And I missed a whole damn trade, and by the time I get into it, if I were to get into it again, because there's a specific metric I follow to get into it or not get into it, these names are going to rip so high from some anchoring bias point that I arbitrarily am fixated on, which is essentially early 2023 numbers, that I just might not gain a trade altogether. And I kind of wonder, like, what the hell am I doing with it? And then another name I thought about cleaning up was where is it? Leonardo DRS. DRS is the ticker symbol, ever so slightly down on that. DRS is one of those names, if you go look at the chart, it's kind of like uranium. It makes a big move in a short amount of time, so maybe let's call that a 20% move in a couple of weeks, and then it trades sideways for a quarter or two, and then another 20% move in a week or two, then trade sideways for a quarter or two. Just like how uranium has been moving, not as of late with the whole parabolic move, but it would jump up and then kind of consolidate in a triangle. I made a video on that some time ago, and then it'd jump up again, break out of the, consolidated triangle, and then that's what it would do. Run really hard in a short period of time, and then trade sideways for all intents and purposes for months, and then it would run hard in a short period of time, and then it would consolidate for months. And Leonardo is kind of the same thing, and it was something I was kind of looking at before the whole Israeli situation, and then that's kind of what prompted me to buy it. And it was after it ran up hard, and fair enough, and didn't get the best cost basis on it. And I don't mind holding Franco-Nevada, but I didn't like buying Franco-Nevada because when I bought it, right now it's sitting at 3.68% of my portfolio, but I'm also down 13.5%. But even when I bought it, it was like 5-6% of my portfolio, and it was a 50-50% chance. Either I figured it was going to fall another 10%, or I figured the Cobre Panama situation was going to get figured out, and it would go up 10%, and honestly, probably 20%. But that's what happens when you take a 50-50 bet. You lose half the time. So is what it is. I'm not really upset about it one way or the other. USAP I just added, so I'm not going to be selling it, even though I didn't seemingly time the bottom right yet, being that I'm down 4.5%. But that's okay. If it keeps falling, then at some point I'll add more of that. ATI, which is that's the publication video I put out, I think a week ago, roughly, about the aerospace and alloy industry, and how things seem to be looking good. Not for Boeing, but other industry participants and themes. Go watch the video or read the article if you want. So that's kind of where I'm at. I don't know what I'll do. Town Square I like. Tidewater I like. Uranium, not ready to sell. Kinross Gold, I have. Look, I don't care about Kinross Gold. Either I'm going to be up a couple 100% on the name at some point and then I'll sell it, or it'll just stay floating around, becoming a smaller and smaller percentage of my portfolio. It's kind of an option play. It's done well enough. Kodiak Gas Services, like whatever. I'm up 22%. I'm not excited about the name. Is what it is. Town Square, I like that. A few months ago, I couldn't get around the valuations or who had the competitive advantage, but I really looked at advertising and connected TV and advertisements and buy-side platforms and sell-side platforms, and then the companies that does, I guess you could say, checks the buy-sides and sell-sides platforms homework, if you will, make sure that the actual targeted, like Double Verify, I believe is one of the companies that. And the funny thing is, ours and Trade Desk is the popular name everyone knows, and I can't buy into those kinds of valuations. I just can't bring myself to do it. And in all those hours of Googling, looking at different names, this and that, Town Square never popped up a single time. I can't even remember how I came across Town Square, but as of the last quarterly report, I believe they've now, I think like 52% of the revenue is generated from Ignite, their online advertising. It's like all this research into advertising, and legacy radio never came up, as well as legacy radio that is transitioning to an online model. So that's interesting. But Louisiana Pacific, already touched about on that. Green Thumb, Glass House, Grown Rogue, those are the cannabis names. I just bought those. I'm not selling them. St. Joe, I just added to that, so I'm not selling it. Valeris, not selling it. Leonardo, MSOS, just bought that, not selling it. Siboney Stillwater, I made a video on that a month or two ago. Like I said, if it wants to fall, I don't know, 50%, I'll buy some more. I don't really, it's an options play, if you will. Again, Triple Flag, like what am I doing? I don't know. See what happens there. Franco-Nevada touched upon that. Transocean touched upon that. So there you have it. That's pretty much it for the week. So I don't have much more to say than the superficial things I said today. I'd recommend you go watch the Every Investor Needs to Know This video I made. It's a 2-hour video. Let me give you a quick overview of what it is. It pertains to the cannabis industry. And the question I have in my mind, by the way, it applies well beyond the cannabis industry. Tech bubble, rubber boom bubble, bowling alley bubble, software as a service bubble, EV bubble. You pick a bubble, it applies to that. And the question was, what were these people thinking buying at the price to sales, the EV to EBITDA, the EV to sales multiples back in 2018, 2019, 2020? But it's a sincere, genuine question, not a rhetorical device to grandstand in some pseudo virtue signaling fashion. It's a serious question. What were they thinking? How could they think it was possibly okay to buy at those valuations? Sincere, genuine question. And I go on with 15,000 words and 2 hours and 20 minutes of video, which, by the way, if you play at 1.5 times speed, is an hour and a half, which is well worth investing in yourself as an investor, but many would disagreeing being defined by their behavior. And to sum it up, the answer is that's the consequence of being an ideologue and a true believer and a useful idiot and constraining narratives in a confirmation bias way to flatter your ego while, well, destroying your stock portfolio, and how it's a community problem and not just an individual problem. Like, go to your favorite crowdsourced stock analytical website or app and go type in Green Thumb, GTBIF, and then scroll down to analysts and all the articles written on it and see all the buy and strong buys in 18 and 19 and 20 and 21. And then go pull up a chart of the EV to EBITDA and price to sales and so on and so forth. And be like, how are they, and whether it's the, and to be sincere and genuine in that, make sure that those are on a next 12 months basis and not a past 12 months basis. Because after all, the story, the constrained narrative, the thesis without an antithesis or a synthesis, they made hasty generalizations, jumped to conclusions because they were cannabis maximalists, and go pull up the sales multiples on those stocks and say, how in the hell did they justify this? And the answer, by the way, is very logically, which is quite the kicker, because most people would say, well, they were just being stupid. It's like, not so fast. That's a thought-terminating declaration and a very superficial, casual critique of what really happened, which is why it took me so long in so many words to really tie it all together. And it's well worth the time, just from a entertainment perspective, from a trying to educate and inform yourself, using information to better put yourself in formation, to be a better version of yourself that acts in a fashion that's conducive with their alleged goals, and to learn how people can be such idiots. It's not the classic normal BS that people tell you, how the analysts were complicit in it, how these self-generated, curated, conspiratorial narratives that people create in their heads allowed them complacency in their cognitive dissonance. I'm just on and on. There's a lot to talk about, and it's well worth a read or a watch or a listen. So with that, thank you for watching, and until next time.